there traders, welcome back to the IX channel where we break down all things finance, economics, and of course the forex market. Today's topic is something that's crucial for anyone serious about forex trading, understanding the CPI and Core CPI. Now, if you've ever wondered how inflation affects your trading decisions or why sometimes the dollar spikes after a certain report comes out, this is the video for you. So grab your coffee, sit back, and let's make sense of this inflation matrix in a way that will help you level up in trading game. Alright, let's kick things off with the basics. CPI stands for Consumer Price Index, and it's a fancy way of saying how much is everything getting more expensive. More specifically, it measures the average change in prices that consumers like you and me pay for a basket of goods and services. This basket includes everything from rent to groceries to transportation. Think of it as a snapshot of how the cost of living is changing. Now, you'll often hear CPI talked about in terms of inflation. That's because if CPI is going up, it usually means inflation is rising, the price is getting higher, and inflation? It's like that annoying friend just keeps taking more and more of your money without giving you much in return. When inflation goes up, each dollar you have buys you less. It's the financial equivalent of shrinking your grocery cart while the bill stays the same. But here's where things get a little more interesting. Have you ever noticed how the price of gas or groceries can go from 0 to 100 real quick? One week, filling your tank feels okay. The next week, you're practically taking out a loan at the pump. That's because food and energy prices like gasoline are super volatile. They're swinging around based on things like weather, supply chains, or global oil markets. Now, enter Core CPI. This is just like the regular CPI, but it strips out food and energy prices. Why? Because these items can make inflation look a lot more dramatic than it actually is. By excluding them, Core CPI gives us a clear picture of the underlying inflation trend. So when traders want to see if inflation is steadily rising or falling without all the noise from gas prices or grocery runs, they look at the Core CPI. Now here's the million-dollar questions. Why do CPI and Core CPI matter to you as a forex trader? It's simple. Inflation affects interest rates and the interest rates affects currencies. When inflation is heating up, central banks like the Federal Reserve and the US might step in and raise interest rates to cool things down. Higher interest rates usually make a country's currency more attractive to investors. Why? Because when rates go up, returns on investment tied to that currency like bonds gets better. More investors want in, and that boosts the demand for the currency, driving its value up. So let's say the US releases its CPI report and it shows inflation spiking. The market might start pricing future interest rate hikes from the Fed, and boom, the dollar strengthens. As a forex trader, you'd want to be ready for that kind of move. It could create trading opportunities, especially in the USD pairs. So to sum up, CPI and Core CPI are two essential tools in a forex trader's kit. CPI tells you about the overall price changes, including the volatile stuff like food and energy. Core CPI, on the other hand, strips those out to give you a clear picture of long-term inflation trends. Both of these reports can move markets, especially if they come in higher or lower than expected. As a forex trader, knowing how to read these reports and use them in your strategy could be the key to making a smarter, more profitable trades. And remember, it's not just about the numbers, it's about understanding what those numbers mean for central banks and interest rates. Because in forex, it's all about staying ahead of the curve. If this video helped clarify things for you, make sure to hit the like button, subscribe for more forex and finance insights, and leave a comment down below if you have any questions or want us to break it down more trading concepts. Happy trading! See you in the next video.